Most retail traders are trying to double small accounts with big risks. That approach has a very high failure rate. At IBF, we take a different route. We focus on managing exposure, controlling risk, and compounding repeatable gains over time. Today, I'm going to show you how a structured approach using controlled exposure can help target around 2% monthly growth on your trading account without relying on oversized risk. Everything I'm about to explain is laid out step by step in the free IBF 2% blueprint. It includes the compounding roadmap and the exact risk rules behind this framework. You can download it using the link in the description. Imagine a £25,000 trading account. Using moderate leverage, that account can participate in a larger amount of market exposure. Exposure is simply the working engine that allows small market movements to have a meaningful impact on the account. Now, this is where most people get confused. Exposure is not the same as risk. Just because you are participating in a larger market value does not mean you are risking that amount. Risk is still controlled from the original account balance through strict position sizing and predefined stop levels. The objective of this framework is not to chase large wins. It is to structure trades in a way that aims to produce around 2% net account growth in a typical month after wins and losses are accounted for. Some months will be lower, some may be flat or negative. But over time, small controlled gains can compound when losses are kept small, and discipline is maintained. Instead of placing one large directional bet, exposure is spread across multiple positions. Some positions benefit if markets rise, some benefit if markets fall. The goal is not to be right on every trade. The goal is to produce a controlled net result across the full structure. Most retail traders focus on big wins. Professionals focus on controlled processes. One approach depends on luck and emotion. The other depends on structure, position sizing, and discipline. Leverage is not the enemy. Uncontrolled risk is. When exposure is used carefully and risk per trade remains small, leverage becomes an efficiency tool rather than a weapon. That is the difference between gambling and capital management. If you're serious about moving away from retail gambling and toward professional structure, you need to track your behavior, not just your profits. I've laid out the exact framework and risk rules in the IBF 2% blueprint document. Download the blueprint at the link below. Apply the rules for at least 30 days and stop measuring success by being right. Start measuring it by how well you manage risk and follow your process. Most traders are looking for the next big move. We are looking for the next right process. The market doesn't owe you a profit, but you owe yourself a plan. Use the blueprint, respect the structure, and I'll see you in the next session.